Navigating the financial landscape, decoding jargon for global business success. EBITDA, earnings before interest, taxes, depreciation, and amortization. It's a measure of a company's operating performance. Synergy, the idea that the value of combined companies will be greater than the sum of their individual parts, often used when discussing the benefits of a merger or acquisition. Due diligence, the process of investigating a business to evaluate its financial and operational health before making an investment or acquisition. Run rate, extrapolating a company's current financial performance over a longer period, often a year, to estimate its annual performance. EBIT, earnings before interest and taxes. A measure of a company's operating performance, excluding interest and taxes. Sustainable growth rate, the rate at which a company can grow without relying on additional external financing, while maintaining a constant debt-equity ratio. Liquidity, the ability of a company to meet its short-term financial obligations using its current assets. Burn rate, the rate at which a company uses up its available cash, often used in startup contexts. Capital expenditures, CapEx, investments a company makes in long-term assets, like equipment or property. Working capital, the difference between a company's current assets and its current liabilities, indicating its short-term operational liquidity. ROI, return on investment. A measure of the profitability of an investment, calculated as net profit, investment cost, x 100. Acquisition premium, the difference between the price paid for a company in an acquisition and the company's estimated fair market value. Amortization, the process of spreading the cost of an intangible asset, like a patent or a trademark, over its useful life. Dividend yield, the ratio of annual dividends per share to the stock's current market price, indicating the income generated from owning a stock. CAGR, compound annual growth rate, the average annual growth rate of an investment over a specified period. Dilution, a reduction in the ownership percentage of existing shareholders due to the issuance of new shares. EBIT margin, earnings before interest and taxes as a percentage of total revenue. It indicates a company's profitability before considering interest and taxes. EBITDA margin, earnings before interest, taxes, depreciation, and amortization as a percentage of total revenue. It indicates operating profitability. Goodwill, the excess of the purchase price of a company over the fair value of its net assets acquired in an acquisition. Restructuring charges, costs associated with significant changes in a company's business operations, such as layoffs or facility closures. Please note that financial language can be complex and context-dependent. If you're engaging in financial discussions, make sure to clarify any unfamiliar terms and ensure that you fully understand their implications. Thanks for watching. Please like, share and subscribe to support the channel.